Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, it was a very interesting 24 hours for the Australian dollar as it whipsawed after initially posting a bullish engulfing Japanese candle, then quickly lost momentum and reversed lower early Wednesday amid uncertainties surrounding the fragile US-Iran peace agreement and continued concerns over how the market will assess on that agreement. The RBA's June meeting minutes reinforced, though, a higher for longer policy stance earlier in the week, signalling policymakers remain prepared to raise rates further if underlying inflation remains persistent. Additional support came from stronger than expected Chinese PMI data as well, boosting confidence in Australia's largest export market. Meanwhile, the US dollar remains support around 101, has continued to price in the possibility of another Federal Reserve rate hike under the chair Kevin Walsh data-dependent approach. Attention now turns to Thursday's US non-farm payrolls report, released a day early ahead of Independence Day holiday. Looking at the forecast, 110,000 jobs are expected to be added, which is down from 172,000 from May. But we always find that the forecast is lower and the number always comes in higher. So we could see this pattern be repeated. And the unemployment rate forecast remains at 4.3%. So turning to the technicals, even though we did get that engulfing candle and the sell-off that we've seen so far, towards the support area anywhere from 68.75 or lower to the key area, which is holding from the rejection from March at 68.35.45. Could see a bear trap there and see a possible rebound, which I anticipate. And from the given signals that we've been seeing, could see a rally back if we see a rejection there to 69 to 70 cents and reassess. Very interesting price action when it comes to euro dollar, when it now looks like it's continuing to flirt around that 114 level. And you can see here we've got a dragonfly doji that could, on the weaker side that is, and could see a move further to the upside. But the technicals are still mixed. We've got a negative MACD and also a mixed RSI. So we do need a little bit more enforcement to the upside. But the key area still holding around 113.40.50, and while intact, could see a move eventually back to 116. Turning to dollar yen, well, as it surges through 162 barrier, climbing to its highest level in decades, as the interest rate gap between the US and Japan continues to drive demand for the greenback. With the Bank of Japan's gradual policy normalization failing to slow the yen's decline, speculation is mounting that the Japanese authorities are edging towards market intervention. And therefore, while some profit taking is emerging, positioning remains far less stretched than during the 2024 intervention that we saw back here in the episode. And from furthermore, the threat is growing that we could eventually see one of these candles come into play. So maybe, possibly, when the US is out for Independence Day, that could happen because the market will be thin. We are extremely overbought and the technicals are overheating on the ADX. So we're not too far away from a technical point for a pullback. Sterling, well, the market's posted a dragonfly doji. And furthermore, all eyes will be on to the speech from the Bank of England Governor Andrew Bailey and also from the Fed Chair Kevin Walsh later on. Also keep an eye on the UK market's Q1 GDP release for fresh direction. The bulls were there, but now a little bit of a question mark. Any pullback likely to be temporary with support around 131.45.60 and a rally up towards 133 to 134 eventually. Gold is still weak and posting its worst quarterly performance since 2013. You can see here that we've been declining now for some time, and 1, 2, 3, 4 into the 5th month since that rally from 5,500, and therefore market still weighing on the support a little bit with the inverse head and shoulders not there anymore, Technically, though, we could see this move down towards 3,945 and reassess from there. I haven't had a strong view since the break of the trend, which was a couple of weeks ago, so I'd rather sit out for the moment. But technically, it's just not performing to the bull case. And oil still holding above that key level, which is seen around $67 a barrel. And I do anticipate from the divergence that we're seeing here, you can see the MACD still climbing, that we could get a rebound and back towards $75 and reassess. Well, that's a wrap. Thank you for joining me. And as always, look out for the intraday report. I hope you enjoy the great start to the day.